Today I want to talk about the real estate market and what may happen moving into 2021 and talk a little bit about the federal budget that was just announced. It wasn't that long ago, April, May, June, where the newspapers, even the banks, were recording massive market drops. They're expecting the real estate market to drop anywhere from 20 to 30%. There was talk about the September fiscal cliff and how it was all going to come crashing down. Now today we're pretty much in the middle of October and things are looking almost as as good as ever for the real estate industry. My local market up here in Cairns is probably performing the best it's performed in the last 8-9 years, and regional markets across Australia really are performing well. Even the capital cities, Melbourne in particular, hasn't seen massive market drops. It's softened slightly, but compared to what was predicted, it is holding up extremely well. Today I want to take a look into where the market may head into next year, being 2021, and take a little bit of a look at the budget that's just been announced and the implications that will have on the next 12 months. So as we've seen, September has come and gone and that fiscal cliff didn't eventuate. Now I actually did a video on what could have happened come September and I'll link to that here. It was one of my most popular videos. Basically it spoke about that the government would continue to throw stimulus and money at the problem being the economy softening, and that's what we've continued to see. As well as that, I spoke about the record low interest rate environment that we're in and how this makes property investing appealing to property investors, and that's certainly a trend that we've seen at the moment, as we are seeing a lot of property investors entering back into the market. Now, just yesterday, the federal budget was announced, and essentially they're predicting a $240 billion, that's B for billion, not M for million, a $240 billion deficit. Now that's money going into the economy that will essentially put more money in people's pockets. Now when people have more money, more disposable income, typically they will increase their lifestyle, and a lot of times that ends up meaning that people will be happy to spend more on property. The more money people have to spend on property, the higher the chances are that property prices will continue to tick upwards. Another thing that was announced in the federal budget was another 10,000 allocations of the first homeowner deposit scheme. Now what this scheme does is allows first home buyers to buy a property with as little as a 5% deposit and avoid lender's mortgage insurance. Now originally this was only forecasted to have 10,000 for this financial year, and already they've increased it to 20,000. It's been a very popular scheme that a lot of people are taking advantage of. Now, if more first home buyers can get into the market, once again, more demand for property, we're likely to see property prices continue to stay stable or go up in value. The other big announcement, huge announcement that was made recently was changes to the responsible lending laws. Now, these responsible lending laws that were introduced after the GFC have really seen it hard for people to obtain loans, as the banks are really scrutinising people's serviceability. Now, the changes to these responsible lending laws, while haven't really been put out there, it has been announced that essentially they're trying to move the emphasis from the bank being responsible for the loans and really having to scrutinise anyone applying for loans, to a little bit more emphasis on the applicant themselves being confident and taking some responsibility for the money they're lending. Overall, what it will see is people able to borrow more money more easily. Once again, if people can borrow more money, they're going to be able to spend more on property, more demand on property, we're likely to see property prices go up. The other final thing that was announced yesterday is interest rates remain at record lows. So interest rates are currently at their lowest point they've ever been at in Australian history, and this is making money cheap. It's very affordable to be able to buy property, and we're seeing really good rental returns across Australia, so this is stacking up and making property investing really appealing. So there's a lot of things that are really piling onto each other here, a lot of government initiatives, government policies and government spending that is really helping property prices remain steady, avoiding those big drops that were predicted, and in my mind really likely to push some serious price growth moving into 2021. At the end of the day, I really feel that property across Australia is too big to fail. There's too much money involved in property There's too much money that the government makes, there's too many people employed as property changes hands. Essentially, like has been seen in the budget, like has been seen in the changing government policies, there is a lot of incentive there for the government to keep property prices strong. And I really feel that betting against that and betting that property prices will take a tumble is a riskier bet than actually buying property and betting on property prices increasing. As always, there are risks involved depending on where you're buying, depending on what you're buying. Every property is unique, so make sure you do your own research before going out and buying. But certainly with all this government stimulus and government policy changing in favour of property and really trying to drive property prices up, I think 2021 is going to be a really favourable year, and I think the budget just announced is certainly favourable for property prices. I'd love to hear your thoughts on where we might be heading in the next year or two. So please leave a comment below, and thank you for watching. I hope you've enjoyed this video, and if you have, make sure you check out some of my other recent videos. Have a fantastic day, and I look forward to talking to you soon.